Good morning to the boom trading community. Good morning to those traders wishing to learn a very simple system that basically, in a nutshell, consists of a 1, a 2, or a 3. And that fundamental basis is how we formulate all of our price action here at Boom Trading. Today, I want to discuss how boom levels, these mysterious levels that people have grown to know and love and have learned to make a lot of money with, work in a general sense. And we will go through a few refinements on that and how you can look at these levels to fulfill your goals of either being more profitable or even becoming a profitable trader. In a nutshell, boom levels are based on a range of sorts that we calculate daily. We have a formula for that, and we also add in some, I guess we'd say, market mechanics or price action that occurred over the last several days to try and figure out which way this market is headed. We also use, as you'll see, strat principles to build these levels and to also highlight which way we think the market is going to head and where we think it's going to pull back to. So without further ado, we're going to get right into the boom levels, some of the other levels we use that are very powerful, in fact, and how these all interface with structure and how they can interface with not only the TT3 model that we teach very heavily and we've come to rely on, but other models as well. So other traders trading other concepts can still make a lot of money using these levels to trade their own concepts. So let's go right into it and start here. What I've highlighted for you is a series of days, probably weeks even, and then we're going to go over these boom levels and how price action interacted at these levels and how you can use this as a trader, as a beginning trader, as an intermediate trader, even an expert trader, how you can learn to use and rely on these levels to give you a clue as to what the market might do. Of course, none of this is 100%. None of this is financial advice at all. And we have to understand that the market does what the market does. However, we do believe that the market does what it does almost the same way every day, with the exception of a few days where it dumps really hard or it rips really hard. It likes to stay certainly in a area where different parts of the world can buy and different parts of the world can sell, so that everybody gets to make money. Usually the retailer's money. So the retail is the money that's used by these large institutions to basically fund their funds and become very rich. So what we really need to do is just learn how to follow along with the big money. You follow along with the big money and you're going to make whatever money you need out of that. So whether you're a scalper, a day trader, whether you like to swing trade, or whether you like to trade longer term positions, these levels give you a very, very good idea of what's going on in the market. We have people using these for futures, for Forex, for commodities. They have used them even for options. For example, using these levels with SPX options is a very, very powerful way to stay on the right side of the market and make a lot of money. So they're extremely important to the boom trading trading philosophy and trading style and trading setup. So let's start here. We are going to have in any one day, we're going to see basically three levels. We're going to have a high level. We're going to have a lower level. And we're going to have a middle level. Okay, I'm back. Sorry about that. I had a small technical issue there. Anyway, as we were seeing, the boom levels, basically consists of 3 to 5 or 6 different levels, but we'll have a higher level, a lower level, which is a kind of a range, and then we are going to have what we call an equilibrium level. So using these levels, we want to trade level to level based on what our objectives are as far as a trader and as far as where we think price action could be headed. So if we look at overall at the levels as well, you're going to start seeing something very, very familiar to those that trade the strat. And what you're going to see is this. Those in strat know this to be a broadening formation. Price moves in broadening formations. And it's very, very powerful to know this simply. And also to know that a 3 in itself is a broadening formation. A swing on a lower level, on a lower time frame, a broadening formation. So what price typically wants to do, and we're going to evidence it here. We're going to prove it. Price wants to take out one side of the range. These are the high sides of our boom levels, right? And then price looks to take out the other side of the range. So buyers and sellers get taken out in this ebb and flow of price action and how price moves. Up and down, up and down, up and down. So we can follow these boom levels within the context of the strat and within the context of broadening formations to know and learn and see what the market is doing, what the market is telling us, where it wants to head, how we can get biases, and how we can basically follow along with the big money to make our little bit of money, which to a lot of us is a lot of money. So, when they're moving millions and billions, we're looking at a few hundred, few thousand a day, depending on what your strategy is or what your level is, comfort level, as to what might be a good profit for you. So we're using these levels just like that based on strat. The other way we're using these levels is, we come down here close to the bottom range for a particular day. And then we want to look and see. We're looking at using these as confluences as well. Because what we see in this case is we're seeing a area where price was aggressively taken up. We have here a sell to buy. And when we see that sell to buy in terms of our 3 bar, we know that in itself, this is a broadening formation. And in itself, it is also a swing. So the way we like to use this is on lower time frames, we could find entries in here. On strat basis, we could find entries in here because we know that this is aggressive buyers here, and using a strat principle alone, when the high of this 3 bar is taken out, we can trade it higher on one signal alone. And we will always want to use lower time frames though, because this 3 bar became a 3, pulled back, and then went back up. So when we recapture the high of that 3 bar, that's an entry for us to get in. And what that entry would have provided us there was just 40 points. So just 40 points on the NASDAQ for those that may not follow along. I think that's 40 times 20 is 800 if my math is right. That's a pretty good living for just about anyone. That's one trade off a 3 bar. All right, so let's go back to our boom levels now. So we trade higher. We fail to capture the higher level. The other way, I forgot this. The other way we use these levels as well is this 6 o'clock time frame. You'll see that 6 o'clock highlighted on all of these things, because if we remain above or below 6 o'clock is very telling to us as to what price might want to do for the day. Now, this is our strategy. It doesn't have to be yours. You can use just the levels. But this is an area we have found to be a lot of confluence with the price action. A lot of times they are going to consolidate around here and then make a move out of there, or a consolidation, a manipulation, and then a distribution right here, the old accumulation, manipulation, distribution type scenario. So there's a lot of ways to use these levels, and these confluences are pretty amazing. So we did not take the high of the level this particular day, but we did take the previous day's high, which is another key level you should have in your charts. This is previous day's high. Okay, so we swept that previous day's high, and knowing two things. One, knowing broadening formations, right? Because we do have a broadening formation here. We know that this could very well be the high of that broadening formation, and they could be coming looking for some lows in that broadening formation, okay? So that's one way. The second way we know this, and this is, again, another confluence for us, is by knowing market structure. This is a higher time frame high. It's a daily high. So once we take that out, we know there's going to be at least a significant pullback. Generally, we like to see those pullbacks into the equilibrium level. And sometimes we will see a trade away from that level, or it'll trade lower, attempting to get to the lower level, and then perhaps trade to the other side. So we simply use price action and strat to stay in these trades for oftentimes very good RR or reward on our trade. The other thing to look for here is when we fail a level, or when we are at a level getting ready to fail a level, look for the confluences with the 3 bar. Okay, so in a broadening formation in itself, keep in mind, this 3 bar, the swing in the lower level, is a very powerful indicator that these big money sellers are now in the marketplace. Sold it down, mitigate higher, and then we come down again. So if you take that across, there's several trades you can get out of this. Okay, if you played this move alone based on strat principles alone, you're looking at 100 some points there. Just knowing that we're going to trade to this level, and we hopefully trade to this level. Okay, but anyway, going back to our confluences there. So you want to use these 3 bars wherever you can. There's very, very, very good confluences in those. And so back to our 3 bar down here, price traded down into a 3 bar. So this is not a golden goose right here. This is not a area we're just going to say automatically blindly take this. No, we want to look for reversals here on the lower level, lower time frame levels. Okay, so very oftentimes that we see a 3 on a higher time frame, we'll very often see a 3 on a lower time frame, or a combination of candles that create a 3. A compound 3 is what we call it in strat terms, that create a 3 that show these aggressive buyers in the marketplace here. So it's just kind of ironic that around this area, they're looking to hold price. Maybe it's protected level down here or whatever. We've had a big sweep of liquidity, and now they're coming to the other side of the range. So had you been able to take a trade there and hold a trade, whether it's on micros or whether it's on full-size minis, it's up to you. But if you trade just at the first level, 62 points, trade back to the previous day's high, 120 points, and if you hold even longer for the higher levels, we're at 176 points, guys. Okay, and you really can't make this stuff up. So we keep going. Let's keep looking to see what's going on here. Okay, so the next day we come in. These are usually the overnight levels in here, and that's fine because you're going to see some London action. You're going to see, I think ICT calls it the 3 drives, 1, 2, 3, then the old dumperoni. So whatever you want to call it, whatever you trade, you can use these levels as confluence areas to take trades from. Again, using our TT3 models, we will wait to see what happens at this level. At this level, in this case, we got a very aggressive move out of there. And that aggressive move led us where? To the other side. We know it's the top of a broadening formation. What happens at the top of a broadening formation? We're going to look to trade to the other side in most cases. Also looking for liquidity, those sort of things. But here's this 3 bar. On a lower time frame, you could have caught very good entries because we know this is what? A high probability level where they will most likely take it at least to the next level. So if we go back in here, just use our reward tool or whatever, 68 points to the first level. If we got hold to the second level, that's 140 points to that next level. Okay, then what happens? Price turns right around, trades back to this level, trades a little bit lower. But where do they trade to? It's no mystery. It's this. They do this every day. They do the same exact things. They trade actually to the boom level that the day before they failed to capture. So this is the boom level. Remember, they left this open right here, and they trade right back to it. And then what? They go. The series continues again. Ironically, though, remember our 3-bar from back here? This is where those aggressive buyers were. Those aggressive buyers are still there. So now we have another confluence to look for, another trade out of that area. And of course, lower time frames, find your entry. This is also in the afternoon, so we had a dump down into a high probability area for us. We look for a reversal out of there. We look for reversals, check on price action, see what it's doing. If we are a strat trader straight up, high probability area, 3-bar confluence, we know that when we take this, look at this actionable signal. 2 down, 2 up reversal. This is a hammer. A hammer is an actionable signal in the strat. We take that level, or we pull back and recapture that level, we are now good for holding longs. It's really that simple. It's a 1, 2, or a 3, and that's it. And we hold to the next level, 85 points. Okay, or you can hold as long as you want, or take profits at this first level. That's usually enough for some. Take money there, leave a runner, see what you can get. You can get this. Maybe we can trade for higher. Who knows? But that's the way we use it here at Boom Trading. But make no mistake about it, without these levels, you're kind of relying on a framework that may or may not exist in your mind or in others' minds and other people trying to teach you. But what we see here is, again, a lot of confluences. 3-bar, we captured the previous day's equilibrium level. We're at the open of the 6 o'clock candle from the day before. And they don't want to take it any higher, they meaning the big money. So we do catch trades out of here. Where to? Another boom level. You really can't make it up. It's pretty funny. To another boom level, we see another reversal out of that level. And we come right back up for a sweep of where they went in. And after that sweep, what do we see? We see another reversal. Where are they headed? Well, we know that if they do not hold this 6 o'clock level, they're going to head to the other side. There we go. Broadening formation again. Broadens. Okay? You really can't make it up. Price action in the strat is the way, the truth, and the life of trading. And I think it's important. I don't know how anyone reads price action without understanding the strat, to be honest. But anyway, that's just me. So to go back through here, again, I now at this point, I just want to go through and start showing some confluences on these boom levels. I mean, I'm not trying to tell anyone to trade any differently than they're trading now. If you need entry models, we got great entry models. But if you're not using these levels here, I think you're leaving a lot on the table, and you can find a lot more confluences and a lot more entries and a lot more ways to trade and make money. So here we're coming off of a previous day's low. Now we also know through market structure that we did not have a sweep down here, but we know that this is the origin of the move down here, right? Because this low ultimately responsible for this high. So once it comes back to that low in that area and the origin where they always like to come, we should look for higher time frame sweeps, which we did not get. So we did not have a sweep. However, we did see a very nice reversal. So this origin level held up nicely. Off of this level and off of this reversal, we see a very aggressive hammer 3-bar in here. We wait for them to take it up, see if they hold it. Once they do, we have a trade out of there using our 3-bar alone. This is without using any other confluences and just using the boom levels, our daily levels, and our entry model that we use here at Boom Trading. So if you take that there, I mean, we're 154 point trade. Okay. Excuse me. All right, so we come into the next day. We know that if this 1800 area, 6 o'clock open, if that area holds, if our boom level holds, we see a reversal off of there. We're coming to the other side. We're coming down here. Okay, it's very, very clear if you just look for the clues that the market's providing us. We could not get above this equilibrium level. Then we see our infamous 3-bar entry. We see aggressive sellers enter the marketplace. They take it out, take it back in, take it down. Of course, there's one last effort to bring it up. That fails, and we come back to the other side. Okay, and this is happening every day, folks. I mean, this is not rocket science. It's just following the market. Level to level, we're at 160 points or so. Now, of course, that trade even went a lot lower, and if you have a runners on this stuff, I mean, just look what a runner would have got you here. Knowing that this level failed, we went to this level, 160 points. Came down even lower, 264 points. And if we had a runner, 775 points. I mean, that's just trading price action, market structure, boom levels, and the strat. Okay, so I'm going to speed this up a little bit and go through more of this price action here so you all can see how these work. Here's another case. These are the overnight hours, the Asia hours. The 6 o'clock open is where? Looks like right here. Right here is our 6 o'clock open. Okay, and market was very aggressive right out of the gate in Asia, Sydney, whatever you want to call it. So you could have found an entry in here if you are an Asia trader and saw that price action. I mean, you're looking at 130 points. You know, if you're looking at just taking highs here, you're looking at least 69 points. That's not bad for an Asia overnight trade. Or take your profit, you know, as early as you can. Put your money in the bank. Leave your runners. Your runners could have got you 120 points. That's crazy. Then what do they do? Well, they come all the way back to where? The 6 o'clock open, which is also our equilibrium level right here. Our equilibrium level. What do we see? We see when the Asia Open, the Sydney Open, they took it out in an aggressive manner. What are the chances that they want to buy there again? Also knowing that we did not take out the range that we saw for the day. There's this level that's still non-mitigated up there. So what happens? We come back down in here. We do not get a sweep, but we can use our 3-bar principle here. We can use our origin of the move principles here. We can use our understanding of market structure and that there is a double bottom in here. And they love to trade their double bottoms, don't they? Or double tops. So when we see that in a key area, 1, 2, call that a double. We see boom. That's why we got them called the boom levels. We went one level to the other level again. And if we were conservatively taking this trade as 183 points. Now, I'm not going to tell you this happens every day like this, but oftentimes it gets a little annoying that it's just every day these levels hit in some way, shape, or form. We go to the next day. Remember I told you previous days' lows are very important also to keep an eye on. Oops, let's see. Oops, let me do this here. So previous day's lows taken out. That's a higher time frame liquidity level. Previous day level taken out, but we have what? We have a failure to close below the low. And because we have a failure to close below the low, we're thinking immediately, okay, if that holds, a failure to close holds, we're probably going to trade back through the range. And how do we know that again? Because our confluences line up that we have a in formation. Interesting how all this lines up, isn't it? Okay, so we trade to the highs. That's all it is every day, guys. Highs and lows, highs and lows. So back to the highs. We did not take out exactly to the level, right? But keep an eye over here, because the next day they came back for that level. But anyway, on this day, we have a 3-bar again at the highs. And we consider these the highs because that's our daily high that we are anticipating some type of action from. We also swept the previous day's highs. So we know that we're going to get this pullback at least into the range. But what do we get? Oops, what do we get here? We get a run all the way to the other side. That's 263 points to the other expando range. To the equilibrium range is 104. And if you're a good holder, you got at least 344 points holding to another previous day level. So make no mistake about it, these previous day levels hold up big time, okay? So not to belabor the point, but again, we're trading back to the range. See a 3-bar at the highs. They sold there before. I think it was, I forget which one of our mentors or teachers told us in the past that if they peed here before, what are the chances they're going to pee there again? That's what the analogy to the dogs. They pee in a certain area and they like to pee there again. So origin of the move, they did pee there again to back down to a boom level. We took out previous day's high, so we know there's going to be some type of repullback there based on structure. It's still like 98 points, guys. That's amazing. Okay, so where do we go next day? Next day, inside day. Why do we know that? Because we are inside the high and the low of yesterday. This is inside price action. This is consolidation. In consolidation, you get a little bit of a choppier move, range day. This consolidation is also indication that the market is getting ready to make a move. So we got to keep an eye on it and see what they do the next couple days or whatever. Anyway, but within here, there are still some very, very decent trades for those that can trade range days. We just expect that will be a little bit choppier price action. We now may not go to extreme targets, so we want to take profits quicker. We want to size down a little bit to protect our P&Ls. All right, let's keep going. All right, so just again using boom levels without going over too much here, but we held the extreme level, okay, after taking out higher levels. Trade back to the extreme level, and we see an aggressive sell out of there. What does that indicate to us? Aggressive sellers are in the marketplace here. These are all 15-minute moves right here, by the way. You can trade this down to 1 minute, 15 second to find real tight entries on this stuff. For example, you had a move out of here. You had another move out of here. So, this initial move, even just, level to level, again, that's 100 points. If you can catch a reversal trade, right here's another 3-bar. Back out of there, back to the levels, another 109 points. Then following price action again and following strat, we can see that we're back in this aggressive sell here, that we can find another trade down to take lows out, 177 points. Now, for this case, how would we get into this? Let's just go over it very quickly. Okay, we know that we're at the extreme high of the range and that we have levels lower. So what are we going to look for in strat principles? Strat says, wow, aggressive move up, but they couldn't get over the 1800, the 6 o'clock previous day. So what does that tell us? Doji candle, right? Still a 2 up. As soon as we come back through and take this 2 down, that's our entry to that move right there. So we take this 2 up, take it into a 2 down. That is our entry. As long as we are below that and hold that level, this play is good. We start coming back in, stop out right away, find another entry. No need to hold it and wish and hope and pray and say market structure gods are going to save me, because they're probably not, okay? So stop out quick, save your P&L, live to fight another trade, another day. That's how simple it is. 1, 2, or 3. You find your entry, you get in, you use a level that we know for confluence, you use an entry that we know for confluence. We know that this is a broadening formation. Take out one side, going to attempt to take out the other. Okay, but they peed here before. They peed here before. And now they are going to do it again. Okay, it's really that easy. I say it's easy, but it's not easy. But you have to learn to read the price action, especially on the lower time frames, to get you into the higher time frames, okay? So again, using our levels, we took out a previous day low. What do we expect? A trade back into the range. Now we know that if we come to the equilibrium level, if they hold that, we're going to go higher. If we hold to 6 o'clock, we're going to go higher. So use these confluences again to find your way up into these trades. Here's our 3 bar again. Aggressive move out of an equilibrium level. So what do we see here? We see the ability to take a trade. If you're quick and recognize what's going on, you can catch a trade here. Lower time frame. Or you would wait this overnight garbage here to come back to where? The place the aggressive buyers came to the marketplace. I wouldn't really call this an origin. The origin would be down here. But for me, this is still an area of interest because we had heavy demand come into the marketplace here. And that heavy demand, again, led to another good trade. So something out of here, you can't make it up. 100 points, 114 for a runner. Next day. Same thing, guys. High of the range. Find a reversal. We're coming down here. We hold this. We're coming down here. We hold this. We're taking out previous day's lows and lower levels. Don't erase the boom levels from your charts, though, because they serve purposes. Look at this. Whoops. They serve a purpose. Again, everything has a purpose in the market, right? We're not just throwing lines up here for the heck of it. Watch this. Okay, remember the other day we went over this. They reversed it here, but they left this open, right? They sure did. Now what? It's no longer open, it's mitigated. They came down and filled that price action, and then what are they going to do? Well, we know from trading what? The strat. And we can actually move our old price. There you go. That we have a broadening formation. We can send this one lower because we know as strat traders what we are looking at. All right, bottom of the broadening formation. Extended on the boom levels. We filled an area, swept a boom level down here. What do we expect? Trade at least back into the range. Okay, in this case, this is the equilibrium. We hold the equilibrium. We hold the 1800. We're coming to the higher levels. And there you are. All right. At these higher levels again. Okay, well, we're at the highs of the level now. They're going to bring this back into the range, even using just market structure. Okay, we took a 15-minute high here. We're going to expect a pull back into the range. In this case, it was actually a full-on sweep. Okay, so these sweeps are very important on 15 minutes too, because you can see that although we did get a slight close below, we got a pullback into the range, and then wham, we got a, watch this. Okay, we did have a close below. So we have a close below in structure terms. We know that the market will trade back into the range and probably continue lower. Or that is the whole theory behind it, right? But we got the trade up, back in the range, trade back down, another sweep, and we got a double bottom, creating what? An aggressive move out. That aggressive move out, we could catch on lower time frames to catch a move out, to trade to where? Back to the boom level. This one holds. We're coming for previous day's highs. or coming for a higher level. There's higher levels back here. We trade right up there. Okay. So make no mistake about it. I mean, these are bigger time frame moves. It's just 130 points. And this is an interesting day here. We went traded to the equilibrium level. We see a 3-bar coming out of our equilibrium level. So what do we know? Aggressive sellers are in the marketplace. Equilibrium level, 6 o'clock level. We can't even get up there right now. Interesting. But we can find trades out of this to trade down to this level. Okay, this extended level here is interesting because overnight they decided that this is a serious accumulation there. And isn't it kind of ironic how this level just held? This boom level right here just held most of the night. So we know there's going to be an expansion coming. Overnight accumulation. The size of this expansion, I don't know if anyone really understood. Maybe there was news that day or something, but we see our aggressive 3 coming off of our boom level. Lower time frame entry. You find it, you hold it, and away you go. Strat principles, very easy. We take this 3 up right here. Of course, when we take higher time frame liquidity, there's going to be a pullback. A lower time frame, these wicks are a pullback. Sold it, opened the candle, sold it, bought it back up. So we don't want to buy the high of this. We want to wait for this pullback, wait for a recapture here. You get this recapture, now we're going higher. Okay, so let's check this out. If we were just holding from here to there, that's a 20-point move. NASDAQ contract, that's $400 on one. $400 a day over the course of a year is about $100,000 a year. Not a bad living for watching candles go up and down. But we hold the runners. 70 points on that runner. Okay, we let runners go even further than that. And this is the opportunity you have from that move. 290 points. Now, I don't know about you, but even on a micro, that's really good money for just holding a candle. Did we know it was going to go that high? Maybe not. But we also are going to use these past levels here to give us an indication or a target. Because as we can see here, what level was not taken out of here? Oops. You see how they left this level alone? It was not taken out. So we use that as a confluence point to see where the market could possibly trade from. And sometimes I post these in the Discord and people are like, hey, where's that level coming from? There you go, guys. There's the answer. It's coming from the boom levels in the past. Because we know they're going to hit that again. And ironically, what happens? They sweep that level again. We get a reversal out of there, and we get a pullback. Okay, and these are 15-minute candles, so we're talking about a pullback of 70 points or so. And we're back to the same thing the next day. Going back to the levels again. Holding the 6 o'clock. We see an aggressive sell out of there. This is a little choppier, a little harder action to play here, honestly. But if you just play level to level, then you are looking at getting a move of 97 points. And of course, we know what happens oftentimes if once they reach the lower level of our expansion range, they are going to do what? You just can't make it up. I mean, it's kind of weird to say this, I keep saying it, but we have a broadening formation. Look at that, guys. Took out the highs, came down, take out the lows, come back and take out the highs. And away we go again. We look at the boom levels on the next day. I mean, these boom levels are just hit, so I don't want to go through this too much more, guys, because I think you're starting to see the power of these levels and how they can be used with strat or with lower time frame entries, or if you're an ICT trader, if you're a volume profile trader, this is another confluence. These levels are dynamic, they are powerful, and they work. Otherwise, we would not be promoting them to our community. We would not be using them ourselves on a daily basis to make money. So, if you're not with Boom Trading now, I suggest you join our Discord. We're posting these levels out daily. We will have an indicator. It's in development now that will be coming out. That'll be accessible to Discord members. And you can see that how powerful this is on one trade alone. You can make very decent money simply trading these very powerful levels. So I hope that was helpful today. If there's any questions, please send me a DM or post a question in our Discord, as we have several traders. There's Dro and Swift FX that also have a ton of knowledge in this, a ton of information to learn. And our goal this year is to help everyone become a profitable trader, whether you live in Singapore, whether you live in Australia, Europe, the United States, wherever you are. These levels are powerful. Boom Trading can help you. We have the strat, which is as simple as 1, 2, 3. And that is exactly how we read price action every day. The strat, our TT3 entries, and we have other entry levels as well. Our boom levels are very powerful levels, but the strat is the basis of what we do. You have to have a firm understanding of market structure as well, because we add market structure to this to show the ebb and flow of the market. But when you put these confluences together, you have a very powerful system that is very simple. And the simplicity of this is what kind of boggles my mind and boggles a lot of other people's minds that are used to trading very complex systems and have to wait 3 or 4 days to find a trade. We find trades daily, and we find them on all time frames. And we use one time frame to confirm another to get into some pretty powerful trades. So I hope this helps you guys. Please come join us at Boom Trading and follow us on Twitter and YouTube. We've got a lot more content coming out. So let's make 2025 our best year ever. Thanks, guys.